How business interruption coverage works might not be exactly how you think. Basically, business interruption does not cover all interruptions to your business. You have questions? We have answers. Let's get into it. To start off, it's important to note that there are many different types of insurance policies out there that provide all kinds of coverages. What we're going to talk about today is about the standard property policy that's available to most businesses. Business interruption is a coverage that's added to a property policy alongside coverage for a building or for business contents or personal property. And it's really important to understand that to better inform what the business interruption coverage is intended to do. Basically, if you have a property policy and you have some kind of property loss, damage to the building or the business personal property that's covered by the policy, that is what triggers business interruption coverage. So business interruption coverage is intended to work alongside the property portion of the policy. It's not an independent coverage, it works in tandem, along with. It's how it was intended to be covered. If you have a fire and they're a restaurant and it's going to take you 12 months to get back in business, business interruption coverage, if you have it, could provide some lost income during that 12-month period, assuming you have enough limit in order to do so. The coverage is intended to provide loss of income during the time that the property is damaged until the property has been restored or replaced and basically you're back up and running. And that is where most of the confusion about business interruption coverage exists for small business owners. If there's no damage to physical property that's covered and insured by the property policy, then there is no business interruption coverage. I'll repeat that. If there's no physical damage to the property that's covered by the property policy, the business interruption coverage is not triggered. Of course, there might be some exceptions based on the way that the policy was written. But the reality is that most business interruption coverage on property policies, this is the simple truth. There must first be property damage to property that's covered by the policy before the business income starts to work. To give two examples of places where generally there is no coverage for business interruption, and you might have to make other preparations to make sure your business can be up and running, were brought to mind by Hurricane Ida. One being power failure, that Hurricane Ida knocked out all of the power to the entire city of New Orleans, and the other being flood. When the remnants of Ida got to the Northeast, it caused record-breaking flooding in that area. In New Orleans, some businesses were directly impacted by the hurricane, and because they were damaged and there was power failure at the premises location because of that damage, then if they have business interruption coverage, it will likely provide the lost income while the business is being repaired. But just like there are some that were damaged, there were many that weren't damaged at all as far as the business itself is concerned. The reason that they have no power has to do to damage to the power company's lines or infrastructure. So in that situation where you simply don't have power at your location because of damage that has nothing to do with your property that's covered on your policy, the business interruption coverage might not get triggered. That is why these large-scale power outages are so financially damaging to small business, because most small business either have no coverage or very little coverage for that kind of an event. Now, depending on where you are in the country, or maybe where you are specific to the coast, and the type of policies that you have available to you, there may be an endorsement that can help you offset and trigger that business interruption coverage, and it's important that you talk to your trusted insurance advisor. It's commonly called off-premises power failure. And whatever the specific endorsement might be called for a specific carrier, the idea is that there may be coverage if there is the same type of damage that would be covered at your location to the power company's infrastructure, which caused you to lose power and obviously lose income. These endorsements are all different, and different companies handle it different ways, so it's extremely important that when you're talking to your trusted insurance advisor, you're aware of exactly where the coverage is, what the coverage is for. Is it for the power lines? Is it for other infrastructure? Is Is it only for catastrophes, or will it cover specific situations like a car hitting a pole or something of that nature that ends up having a power outage at your business? Now, if you're in an area that's prone to hurricanes, and hurricanes often do damage to power infrastructure, a lot of times these coverages are just flat out not available. Or if they are available, the cost is prohibitive for the average small business. But it doesn't hurt to ask about what is available and what isn't available. So make sure that this business interruption type of loss, power failure, is a conversation that you're having with your trusted insurance advisor. The other example from Hurricane Ida, or the remnants of Hurricane Ida, was flooding. So the average property policy does not cover flooding in any way, shape, or form. Now, there is a federal definition to the word flood, and it basically means water rising from the ground up that damages 2 properties or more than 1 acre of flooding. It's not a coconut hitting the top of your roof and water coming in and filling up just your house. So we're talking about, these are situations where there's storm surge, rivers overflowing, or there's just so much water that has no place to run off to that it rises slowly from the ground up. Whether it's homeowners or business policies, most property policies specifically exclude floods. So since there's no coverage for flood on a regular property policy, and if you have a business interruption due to a flood, the business interruption coverage wouldn't be triggered. Similar to the power failure, there's no direct covered property loss to your business property listed on the policy, then there's no coverage for the business interruption. Flood is excluded, there is no coverage, there's no business interruption. The most common flood insurance policy that's available, and the one that most people purchase, they buy from the National Flood Insurance Program, either directly through FEMA or through what's called the Write Your Own company, which are acting as third-party administrators for the National Flood Insurance Program. The NFIP doesn't have an option to provide business interruption coverage on their policy form. There are other non-standard insurance companies that can provide flood insurance for your business that includes business interruption. But because the terms are so different, the premiums are significantly higher than a small business might think, so many end up going without buying that excess or primary with business interruption flood coverage from a private insurance company. Another option that exists, if it's available to you, is something called a difference in conditions policy. A difference in conditions policy is a gap between 2 different policies that basically says if these conditions are different than those listed on the policy, this secondary policy would provide coverage. Called the DIC for short, if you have a DIC available to you, it might be worth talking to your insurance advisor about whether or not flood could be included as one of the perils for a trigger of business interruption coverage. Again, not really very available in hurricane-prone areas, simply because storm surges tend to cause lots of flooding. And sometimes there's confusions as to whether a storm surge is a hurricane or a storm surge is a flood. But the reality is that if it fits that definition of water rising from the ground up that damages 2 properties or inundates more than 1 acre, it's a flood regardless of what the cause of the flood was, and generally excluded on the standard property insurance policy. So what this means for your small business, if you can't buy these extra coverages or they're just outright not available to you, is that you have to make those preparations for these types of events part of your regular business planning. As an example, here in Florida, it's one of the reasons why so many businesses invest in generators, because power outages are a normal occurrence during hurricane season if you're unlucky enough to be in an area that's affected by one. And in order to get back in business as quickly as possible, investing in the process and equipment necessary to install a generator is a good investment that pays dividends during these times. Similarly with floods, it's making plans to make sure that your property is as protected as possible against the possibility of a flood. For a business that only has business personal property, it could be lifting the property off of the ground so that if there were a flood up to a certain level, it wouldn't reach the stock or would damage the stock as little as possible. It could be making sure that the location you choose to put your business personal property in, or that building that you purchase, that you do some research before purchasing it to see what is the likelihood of flood in that area and what are the processes available after a flood to get you back up and running, so that if you do have a loss, you're not losing that income, but except for the shortest period of time possible. I also think it's important to note that regardless of whether you believe or even your agent believes that there is coverage on your policy for any of the situations that we've described, that you still file the claim with your insurance carrier. The reason for that is because every claim is about the specifics. And like I had said earlier, there are exceptions that may trigger coverage. And you don't want to miss out on having coverage on your policy simply because you had the idea that, well, this isn't covered by it. File that claim. Let the carrier make the determination. Talk to your agent to see if there are any events that might trigger coverage. And even if business interruption coverage may not be triggered by the loss, you may find that you have other coverages on the policy, especially if you have a BOP, that might end up providing a little bit of relief, not from a business interruption perspective, but from other coverages that were on the policy that end up giving you some relief during that time, even if it's not the full loss of income. Now, not all insurance is created equal. Though we've been going over some general definitions, general terms, and general concepts, every insurance policy is different. And it's important that you read the exact terms and conditions of your insurance policy in order to understand whether or not these coverages are there, not there, or available. Talk to your trusted insurance advisor. That is what we're here for, to have these conversations, to work alongside you, to think out some of these possibilities and hopefully find solutions, whether they're insurance-based or otherwise, to help your business continue to grow. If you don't have a trusted insurance advisor or you'd like a second opinion, feel free to reach out to us at www.depozoinsurance.com. There you'll be able to chat, text, email, or even start a quote right there online. If you found this information useful, please hit that like button and share it with someone who you think might need it. If you'd like more useful business information and insurance explanations, please hit that subscribe button. We make a lot of insurance videos, but we have a little fun too. Thank you.